Hello and welcome to another update video about FET. FET has only been moving sideways yesterday. So since the last update, we haven't had too much price action. It still keeps the door open for maybe one more low into this white support zone, which is the zone that indicates the likely projections for the C wave. Okay, so let's talk about the internals of this structure first. And we're dealing here obviously with a corrective structure. That's my base case. Well, it's clearly corrective because we haven't had any impulse up from the recent lows. That's corrective. That here also was corrective. And the rallies have been corrective since this wave topped here around the 9th of March. So that means we're still caught in a correction. And it makes the exact interpretation of the microstructure a little bit useless. Okay, as I always say, identifying microstructures in corrections, it's great for education. It's great for understanding, okay, do we have an impulse or not? Because if an impulse shows, then we have a low. And what could possibly be the targets for this correction? But, you know, it's not, I'm sorry, but it's not stable at all. This corrective structure, it's just not, and it will morph and change. And we constantly get new information in these corrections that we will use to, let's say, modify the microstructure, and we have to react very quickly in these corrections because the chart could turn at any juncture. You know, there's always, at any juncture, there are like 10 different corrective structures that could unfold, leaving probabilities rather balanced. But yeah, at the moment there is no indication a low is in, but I think we could be close to a low because my base case is that this is a wave 4 correction in the white count. And the idea is that we had an A wave down, which bottomed around the 19th of March, around $2.15. We had a 3-wave corrective rally, as you can see here, which would be a B wave. And the C wave is ideally a 5-wave move. So if it's not a 5-wave move, well, then it's not a C wave. Could always be something different. But for now, I'm tracking 5 waves down. We have 3, a possible 4, and the 5th wave could be unfolding right now. So it could be that we get one more low. That's also preferred. Why? Because when we're dealing with a structure like that and we have an ABC structure, the ideal target for a C wave is the 100% extension of the A wave that points towards $2.39. So at the moment, therefore, I have to say that it seems likely that we get to that 239 level. We don't need to stop there, you know, and we will continue to drop until we see a first small impulse to the upside. That's precisely why I'm tracking the micro, so I get a good understanding of when an impulse to the upside is showing. At the moment, not yet. So it's technically possible that with one more low, actually we could have a low. We could have a bottom that's forming. However, it would leave us with an overall very shallow pullback only. A very shallow correction again. And that leaves us with a potentially somewhat unreliable pullback, wave 4. Because this wave 4 could still extend. So it's possible that, yeah, this is an ABC structure. But who's telling me that's already the wave 4? It could also be just the A wave of the wave 4. We're getting another B wave corrective rally in wave 4, then a C wave down, and then we rally from there. That's just something we always need to be very much mindful of, should a correction be shallow. But we've had lots of shallow pullbacks in this bull market, and the bull market isn't over yet, at least not from what I can see. And therefore, yeah, we have to expect pullbacks could just be shallow. So all you can do, I think, in these situations is not so much focused on the micro, but understand what the relevant key levels are, understand where the scenario fails, which is below $1.28. That's really where the scenario fails. Try to get the lowest price when you buy. Don't try to go for the perfectionist approach. Maybe just scale into the support regions, add a little bit as the price drops. And then once we have a low in place, you can always go in more aggressively with a stop below the last swing low. But for now, there is no low in place in this correction. But one more low seems likely. $2.39 would be next support, then $2.19, $2.08, and $1.91. These are all common targets for a C wave, which would be in this case within a wave 4. And once this wave 4 correction is over, I expect the price to rally next to $4.72. That's my update about FET. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.